Welcome back, my dear students. In the previous lecture, I have completed about the section and with the four couple of lecture of trend concept on a price action chart. In this section, we will learn about the logging indicator in the financial market. From this lecture 1, I will explain the stronger logging indicator, that is the moving average. So in this lecture today, I will be talk to you about the basic characteristics of moving average and how to use it. So let's start. The moving average is a common indicator for you to determine the trend in the market. When you can use more than one moving average, these averages are often used to determine market entries as well as support and resistance level. In technical analysis, the moving average is an indicator that is used to represent the average closing price on the market over a specific period of time. It can be a good indication of current market momentum. There are two most common moving averages that are used in the security market, the simple moving average and the exponential moving average. The simple moving average is a simple average of currency pairs movement over the time. We collect the 5 days closing price from the price action chart and calculate to the moving average. Here we see the 5 days closing balance and then we found simple moving average result as using this formula. On the other hand, the exponential moving average gives greater weight to more recent price action. The exponential moving average moves much faster and changes its direction earlier than the simple moving average, which means that when market price changes their direction, the exponential moving average recognizes this sooner, while the simple moving average takes longer to turn their direction. It also waits for price turn. The most commonly used exponential moving average in the price action chart 5, 10, 12, 20, 26, 30, 50, 100 and 200 etc. Basically 30 and 50 exponential moving average mostly used to determine the direction of trend. When prices are trending higher, the moving average will adjust higher and reflect the increasing price. This could be clarify a bullish signal where traders may prefer buying opportunities. The opposite would be true if the price was consistently trading below using the moving average indicator, where you would prefer selling opportunities due to the market signaling a downward trend. The moving average for support and resistance level. The moving average can be used to determine support and resistance level once a trader has placed a trade. That will find the market trend and trading entry and exit point. And then you can use moving average indicator to identify market trend and your trading signal. It also indicates the market momentum on a price action chart. So not more today. Have a nice day. Goodbye.